Hey everyone, welcome to new video. So everyone is talking about how AI is going to destroy software companies, but what if the market is completely wrong? Over the last few months, we have seen high quality software businesses in the world have crashed. In some cases, falling 40 to 50% from their high. Most of it is because of Anthropic, which is a new AI tool that is sending shutters through the software stocks. But here is a question: what if AI doesn't destroy these companies but actually make them stronger? Today I am going to show you several stocks that I believe could actually benefit from AI instead of being disrupted by AI. So, right now, the market is pricing in a massive disruption. Investors believe that AI agent will replace traditional software. Because of this fear, many high quality companies have seen huge corrections. For example, ServiceNow has corrected 50% from its peak. Salesforce is roughly corrected by 40% to 50%. Even Intuit has seen a major sell off by 50%. Also, we are going to talk about companies like Accenture, which have seen a massive sell off by 44%. I want to tell you that these are not weak companies, these are dominant enterprises software platforms. But investors are asking a simple question: if AI can do everything, do we still need these companies? So, my core thesis is what I believe the market is might be misunderstanding something important. AI does not always replace software. Very often, AI becomes a feature inside the software. Think about this. When cloud computing arrived, many people thought it would destroy traditional enterprise software. But what actually happened? The strongest company adapted and became even stronger. I believe something similar may be happening with AI. We'll take an example of Intuit. Many people say AI will replace accounting software like QuickBooks. But what if opposite happens? Imagine AI integrated directly into QuickBooks. Instead of manually entering expenses and receipts, AI could read receipts automatically, categorize transactions, prepare tax documents, suggest financial decisions also. In that world, QuickBooks doesn't disappear. It might becomes financial autopilot for businesses. And remember, Intuit already owns massive financial datasets, which AI system need to function also. Another interesting company is ServiceNow. ServiceNow is not just a software. It is basically workflow engine for large enterprises. Businesses use it for IT service managements, internal workflows, employee requests, security operations, and many more. Now imagine AI inside these workflows. An employee reports an issue, AI automatically detects the problem, creates a ticket, routes it to the right team, and in some cases solves it. Instead of destroying ServiceNow, AI could make it more powerful. Then we have companies like S&P Global. This company controls massive financial datasets used for the entire financial system. And here is something important. AI systems are only good as the data they are trained on. Companies like S&P Global provide structured high quality financial datasets that could actually make them more valuable in an AI driven world. Another interesting case is Accenture. Some investors think that AI will reduce consulting jobs, but historically, Every major technology shift actually increased the demand for consulting. Think about cloud migrations, cybersecurity, digital transformation. Companies needed experts to implement those technologies. AI adoption may create the same situation. Businesses will still need to partner to integrate AI in their operations. So, I have currently invested in these 7 companies. I have bought these stocks on these current prices, and also on a valuation perspective, these companies looks cheap. So finally, here is the big question. Are these companies being finally disrupted by AI, or are they simply going through a temporary market panic? For long-term investors, this might be one of the most interesting moments in enterprise software in years. Because if the companies successfully integrate AI into their products, the current sell off might actually turn out to be a huge opportunity. Lastly, I want you to look at this video, what Jensen Huang wants to say to this particular problem.
Market's got it wrong. I think it's very likely that these companies that we're talking about are going to introduce agents that run on their platforms. You know, these agents, of course, they have to be experts in what they do, and nobody's going to understand customer service better than ServiceNow, and they're going to come up with agents that are really fine-tuned and optimized for the type of work that uses the tools that they have. In the end, also, we need the tools to finish their work and put the information back in a way that we can understand. And that we call them system of records. And so each one of these tools have their own system of records. Those system of records exist because we put them there and we use it so that we understand the information that's finally complete. And so those system of records will still be ground truth, and they'll continue to be ground truth. And now the agents will help, they will use it, and they will populate the system of records. They will use the tools that are available on these platforms.
So that's it for this video. If you enjoyed this video, make sure to subscribe and like this video, because I'll be covering more deep dive analysis on the companies which are, I think, good for long term.